The year is 2025, a year that promises to be pivotal for investors around the globe. The global economy is in a state of flux. Economic indicators are sending mixed signals, and geopolitical tensions are adding to the uncertainty. Traditional markets are experiencing unprecedented volatility. Stock prices are swinging wildly, and investors are finding it hard to predict the next move. Meanwhile, the world of cryptocurrencies is experiencing a resurgence. Digital currencies like Bitcoin and Ethereum are seeing renewed interest and investment. Investors are presented with a crucial decision. Should they stick with traditional stocks or venture into the relatively new and volatile world of cryptocurrencies? Where should they place their money? This is not just a question of preference, but one of strategy and foresight. This is the question that we aim to answer in this essay. We will delve deep into the factors influencing both markets. This essay will explore the current state of both the stock market and the crypto market. We will look at historical trends, current performance, and future projections. We will analyze the potential benefits and risks associated with each. Understanding these factors is crucial for making informed investment decisions. Our goal is to provide you, the reader, with the knowledge to make an informed investment decision. By the end of this essay, you will have a clearer understanding of where to allocate your resources in 2025. The stock market is often seen as a barometer of economic health. In 2025, the stock market is reaching new all-time highs. This bull market, however, is not without its cracks. Interest rates are rising, inflation is soaring. These factors are making some investors nervous. Despite these concerns, many analysts remain bullish. They argue that the underlying economy is strong. Corporate profits are at record levels. They believe these factors will continue to propel the market higher. After a prolonged bear market, cryptocurrency is showing signs of life. Bitcoin, the flagship cryptocurrency, has broken out of its slump. It is trading at levels not seen in over a year. This renewed interest in crypto is being driven by several factors. Institutional investors are starting to enter the market. They bring with them significant capital and legitimacy. Additionally, there is a growing awareness of the potential benefits of blockchain technology. This is the technology that underpins cryptocurrencies. Section 4. Presidential endorsement: Trump on crypto. Adding fuel to the crypto fire is former President Donald Trump. Once a skeptic, Trump has changed his tune on cryptocurrencies. He recently praised Bitcoin, calling it a very interesting asset. This endorsement from such a high-profile figure has further boosted confidence in the market. Trump's pro-crypto stance is significant. It signals a growing acceptance of digital assets by the mainstream. It could pave the way for more favorable regulations. This is a key concern for many institutional investors. Section 5. Stocks, safe haven or gamble. Stocks have long been a staple of investment portfolios. They offer the potential for long-term growth. However, they also come with risks. The stock market is inherently volatile. It can be influenced by a multitude of factors, including economic data, geopolitical events, and even investor sentiment. Investing in individual stocks can be particularly risky. It requires careful research and analysis. Investors need to understand the company's financials, its competitive landscape, and its growth prospects. Section 6. Crypto: high risk, high reward. Cryptocurrencies are a relatively new asset class. They have only been around for a little over a decade, but in that short time, they have made a significant impact on the financial world. They are known for their volatility. Prices can skyrocket one day and plummet the next, making it a roller coaster ride for investors. Bitcoin, for example, has experienced wild price swings throughout its short history. From its humble beginnings to reaching all-time highs, Bitcoin's journey has been anything but stable. This volatility can be both exhilarating and terrifying for investors. The potential for high rewards comes with equally high risks. However, this volatility also presents opportunities. For those who can navigate the ups and downs, the rewards can be substantial. Savvy investors who can stomach the risk have the potential to generate outsized returns. They use various strategies and tools to make informed decisions. It is important to remember that cryptocurrencies are still in their infancy. The technology and market are evolving rapidly, and what we see today might be very different in the future. The market is largely unregulated, which makes it susceptible to scams and manipulation. Investors need to be cautious and do their due diligence before diving in. Section 7. Charting your investment journey. In this section we will explore the various avenues available for investing your money in the year 2025. The financial landscape is ever evolving, and making informed decisions is crucial for achieving your financial goals. So where should you invest your money in 2025? The options are vast and varied, ranging from traditional stocks and bonds to the more modern and volatile world of cryptocurrencies. The answer, as with most things in finance, is not straightforward. It requires a deep understanding of your personal financial situation, your risk tolerance, and your long-term financial goals. It depends on your individual circumstances, risk tolerance, and financial goals. Consulting with a financial advisor can provide valuable insights tailored to your specific needs. If you are risk-averse, then the stock market may be a better option for you. Stocks have a long history of providing steady returns over time, making them a reliable choice for conservative investors. It is a more established asset class with a longer track record. Historical data can offer a sense of security and predictability, which is appealing to many investors. However, if you are willing to take on more risk, then cryptocurrencies may be worth considering. The crypto market is known for its high volatility, but it also offers the potential for substantial gains. They offer the potential for higher returns. The rapid growth and innovation in the crypto space can be enticing, but it's essential to approach it with caution. Just be sure to do your research and understand the risks involved. The crypto market can be unpredictable, and it's crucial to stay informed and vigilant. Ultimately, the best approach is to diversify your portfolio. Diversification helps spread risk across different asset classes, reducing the impact of any single investment's poor performance. This means investing in a mix of different asset classes. A well-diversified portfolio can include stocks, bonds, real estate, and even a small allocation to cryptocurrencies. This can help to mitigate your overall risk and potentially enhance your returns. By balancing your investments, you can achieve a more stable and resilient financial future. Remember, investing is a marathon, not a sprint. Patience and consistency are key to building wealth over time. Don't get caught up in the hype. Sensational news and market trends can be distracting, but staying focused on your long-term plan is essential. Make informed decisions and stay disciplined. By doing so, you can navigate the complexities of the financial world and chart a successful investment journey.